Good afternoon. This is Bakes, Kevin Baker with Bakes Takes. Welcome to the podcast. This is Friday, October 8th. I hope you're having a great week. Hope you have a great weekend. Let's get right into it, folks. Why I do this. My sons, Bobby and Jack, they're 24 and 23 now, but during college, they would call up and ask me questions and have their friends join in. And frankly, this is a blatant excuse for me to stay in touch with my sons more and talk about money and markets, which I've been doing for 25, 30 years. I just eat this stuff up, and I hope I can be helpful to you. I was a stockbroker during the 87 crash, which led me to my journey where I learned what I didn't know then, and I became very ensconced in charts, technical analysis, patterns, volume, and getting a feel for what the market is speaking to me, and then where I should do the fundamental work. I do the technicals first, the fundamentals second. It isn't right or wrong, but it works for me. More on that later for a fan question. I read the Journal, Barron's, The Economist, newsletters, listen to dozens of podcasts. I monitor what my Google alerts are bringing in. I always point you to those, give attribution, so you can go look at those, but I'm doing the work if you don't want to do it. I eat home cooking. All I do is talk about what I invest in, what I'm interested in. Tell me what your pain points are, problems you'd like solved, topics I should covered. Thank you. Thank you especially for Charlie, Justin, Murph, for helping me along my journey here. We are going to have Bakes Takes Plus. Yes, I'm behind. That's my fault, but I'm working diligently on that. I want to make sure that this free content stands on its own before I offer premium content. I'm going to have calls on Discord. I'm going to teach technical analysis. I want you to help me design the show. Tell me guests I should reach out to. Had a great response for all the guests that we've had recently. Matthew Tuttle, Tim Rotolo, Gus Christensen really had a very positive response, and I want to do more of those. Would you like a text like I send to my sons when I'm putting an investment on? 610-331-4283. I'll sing, give me your birthday, I'll sing happy birthday to you, and it will brighten both of our days and give us an excuse to chat. So I hope that's appealing. Here's my disclaimer. I'm not a lawyer. I don't play one on TV. This is not investment advice. Please conduct and share your own due diligence, and the sharing is becoming more and more and helping us as we go along. Good week for fan mail, and I always give my son the first crack at the bat. So he asked about SOFI and the 10-year yield, and we'll go into that. SOFI, SOFI, a company that was SPACed by Chamath Palihapitiya, a great consumer finance brand. Jack's a fan, and I'm becoming a fan of the stock. I like the service, but I'm always I let the market tell me what to do. So I put this chart up here, and please go to the YouTube channel so you can see the visual and the lines and arrows that I draw here. I think they're helpful. But here's what's going on with SOFI, Jack, and anybody else who's interested. 1858 is the line to watch. Okay, I drew it here. Two recent highs. And it looks like it's basing here, and the volume's picking up, which I always want to see. So if you see a close above 1858 and on some improved volume, earnings are coming up in a month, then you might have something going on with SOFI. So I would encourage you, as I have, plug it into your Google alerts so that everything that comes down the pike in terms of insiders or interviews or their IR department, all that stuff comes to you automatically, and you can flag it, and it gives you a great excuse to call the company when you see things coming out of the Google alerts. So that's a little trick of the trade that I've used over the years that's been very, very helpful. So I agree with your thesis. Student loans, they restart in January, and if the government doesn't provide some relief, and it looks like they're not going to, there's going to be it sounds like a huge refi opportunity. They seem like they're emailing left and right and snail mailing left and right. And refinancing a student loan from the 7s down to the 4s is, I think, going to be a pretty good business. And it gives people an excuse to go to SOFI. It brings in a new customer, and then they can sell them other stuff. So that makes sense to me. Higher interest rates, is that good for them? I got to believe so. I mean, it's good for banks. It widens what's called NIM, net interest margin. So the bigger the spread on what they can earn for money and charge you, is, I think, going to be helpful. So that sounds like it makes sense. I don't have a model. I haven't crunched the numbers to the extent that maybe you will, but this is just me thinking, at 10,000 feet. The cross-selling opportunities to get other services make sense. The team, I think, is top-notch. Noto, I think it's Anthony, is very widely regarded. Chamath Palihapitiya took, of all the things he could have bought, it was this. Chamath puts a lot of skin in the game. I like him personally, and I think it's high praise that he selected Noto and SOFI for one of his SPACs. Competing with Robinhood sounds like it might be kind of fun given the controversies and travails that they've had. I have no idea what their percentage of crypto is, but that sounds like a long-term opportunity. And yeah, could JP Morgan or somebody like that, who Jamie Dimon, the CEO, talks about, unregulated fintechs getting ridiculous multiples. Well, maybe they join him rather than beat him. And buy a fintech like this and incorporate it into what they do. They've done smaller deals in the past, and I think it makes some sense. So here's my take, Jack, and anybody else. Look for the 1858 close and on big volume, and if all these other parts of the puzzle fall into place, then I think you have a really good long-term investment. So at least potentially. Next, the 10-year yield. Yeah, rates are going up, and I always like a picture, a chart, and you take a look at the lines that I've drawn here. Inflation is sounding like it's not as transitory, even by Powell, as people think. You're watching oil hit $80 today as we speak, and obviously uranium is going north, and other things are as well. So, to have the 10-year go from 50 basis points a year ago to 1.57% doesn't sound like much, but it's a big percentage move. But look at this price action. If you see a close above 1.57, that means you're probably challenging 1.7%, and then 1.765. And if you see these lines taken out, and I'll go back to this chart and revisit it in future episodes. But every time this happens, it's bad for stocks. It's just higher competition. It makes the future cash flows discounted at higher rates. And when you have valuations where they are, which are very historically stretched, it's going to bring the stock market down. And we've seen that with a lot of the big tech names this past week. It isn't fatal. Doesn't mean it has to, be calamitous. But it is not. You can make it a neutral, but you can't make it a positive for stocks, in my view. So hope I handled that. Charlie from New York called in and asked about space. And I like this because you really make me look at areas that I wouldn't otherwise look at, and more on that later. But here's what I've come up with in my cursory and first look at the space, if you will. SpaceX, to me, the private company that you can't invest in, is widely regarded as the best of the best. They can go into orbit. They are lowering costs. They have a monstrous NASA contract that Jeff Bezos and Blue Origin is challenging, and they seem to be the renewable rockets and just wide, very wide and wild ambitions. And they seem to be, by far and away the class. They just raised money at $100 billion valuation. For contrast, Tesla is $800 billion. So this is becoming a more and more important part of Elon's time and attention. So now all these companies are losing money. This is ridiculously capital intensive, and it is very early in my opinion. So what do? I go to the charts so I see where there's something going on. And I go to Virgin Galactic first. This is another Chamath Palihapitiya SPAC. Richard Branson's Virgin Galactic. Can you move that up a bit, buddy? Thank you very much. And I drew some arrows here that I want you to pay attention to. Make a long story short, I think this is dead money for now. I think space tourism is not going to be where you want to be. Chamath himself has been selling lots of stock. The volume is picking up on the down days. We're hitting lows. Right after the SpaceX civilian mission went very, very well. The relative strength is 9, so I wouldn't touch Virgin Galactic. I'll keep watching it. Maybe things will change, but with a money-losing company without catalysts, it's not for me, and I don't think it should be for you either. Next is ARK, Kathy Woods, Space Exploration Innovation, and I don't know the mix. I didn't look at the components of this, but I'm sure a lot of these suspects are in there. It's a pretty small universe, and unfortunate timing for the launch. Bottom line here for me, if you see it close below 1912, I think that's going to be an air pocket. There's no support, and it's going to descend even further. A close above 2019 is very good. I doubt you get it, given what I'm seeing in the public players. So again, I'm not enthusiastic about space right now. Rocket Lab, pretty compelling chart. I mean, that looks like it's perking up the way you want it to on big volume. Full disclosure, I have not done what I used to do in the past with individual names, where I would get my questionnaire out, I would read the 10K, I would get the CFO on the line, and I'd ask a lot of really, really tough questions and get into the nitty-gritty of the business. I have not done that in this case, but I just wanted to be responsive to your request. So Rocket Lab would be the one that I would do more work on if you really feel you need to have some exposure to this space. I'm going to talk more about that too. And in researching this, I found that there's old space, which is the old defense contractors like Lockheed Martin, and yeah, it's kind of said in disparaging terms, and then SpaceX and etc. is new space. So to have this matter for Lockheed Martin in any meaningful way, I'm going to say no. It's there's nothing going on here, and I don't want you to take live money and make it dead. So am I being vague? No. All right. So here's my take. I encourage you to let this is my point I wanted to make. This is why I go technicals first and fundamentals second. I encourage you, as I do, to let the markets point you to opportunity rather than news, etc. To have the participants in the market tell you, and I know you don't see things the way I do because I've been doing this for so long, and I'm probably got a billion charts, burned into my retinas right now. But I can see when something is going on to the positive and to the negative, and I really hope I bring some value in that case. So I find the uraniums and the short SPAC ideas because the market's telling me to look there, and then I go find the news and the fundamental information that supports that, rather than grabbing a headline or having a thesis and then trying to force it on the market. The market always wins, and I want to be right with it. Rocket Labs is a possibility. The rest of the space is an avoid. And keep your eyes on SpaceX. If that goes public, that's going to be a very different story. I would love to see the financials of that. They are in the podcast universe that I expose myself to, they are revered, frankly, and seem to be a fascinating company. So, but they're private, so you can't invest in them right now. Square. Wanted to go back to this because I've had supporters and fans and subscribers in the past ask about this, and I really think that this is going to be an important part of my service going forward. I put this in my system, and I monitor this, and you can go off and do what you want, and then I'll come to you and say, hey, you might have missed this, but in this case, Square closed below the 200-day moving average on big volume, and that's a negative. Now, I don't want people to go apoplectic. Square is a phenomenal company, a disruptor. They have exposure to crypto, all of those wonderful things. They also have a PE of 144. So everybody and his brother knows how wonderful this company is. It's had a huge run, and so as my sell discipline would dictate, I would sell a third. So stock's at 248. If you're in at 48, selling a third, I think, is just a smart thing to do. Pay the long-term capital gains, smile, have some cash, give yourself a win, and if it rockets to new highs, so be it. You've got 2/3, and you can add to it if you choose to. But I've seen this movie. This is year 12 of this bull market, and this is starting to roll over in my view. So here's my take. If you have a dividend discount model you would bet your life on, this is a very different story. If you think you can forecast and build the next 5 to 10 years and come up with a present value that's more north of 248, great. I hope you've picked up my extreme skepticism of being able to do that, especially at this elevated price and given the time we've had. But when my sell discipline kicks in, it works very well. I've shown many, many examples. I'll give you more if you want. And I'm doing this more in real time now so you can see it. I would take a third off the table. And I hope that's helpful, and I hope this gets to you. But as a good example for Bakes Takes Plus, I'll monitor your stocks and ETFs for a smaller group of people, and I'll give you an alert via text or what have you. Hey, this is what's going on, and you got to at least ask some more tough questions. And tell me what else you'd like as well. Charlie again asked, and I'm going to paraphrase some of this, but could this be a very long-term secular bull market given the retail activity that's coming in, $1 billion so far this year versus $1 trillion. We're throwing trillions around now like their pocket change right now. Go up, Mike, please. Thanks. Retail activity, $1 trillion to global stocks. 2021 greater than the cumulative inflow of the prior 20 years, according to B of A Global Research. Free trading, access on your cell phones, putting into billions of people worldwide. Could this broad adoption be a perfect cocktail for a worldwide buying spree? And I'm going to say, doubt it. And I hate to be like that, and you're going to, okay, boomer me, and that's okay. But I've got the scars, and I've seen these movies, and I also have this chart, which I show you. This is the last 10 years plus, and here we are at 439 on the SPY, up from 67, so up 7 times. These kinds of extrapolations, linear thinking, projecting the recent past into the future happens at the right arrow. At the left arrow, people are grabbing their boxes and leaving Lehman Brothers, and so I understand the optimism, but this is where we are. We've discounted a lot of the things that you just described, and for especially my boys, but all of you in your 20s and 30s, you've only seen up. It's been 10 years, 12 years of up. March 9th, 09 was the low, and here we are, and we're up and to the right. So I caution you that the first time the Fed, puts on their cape and does their underdog, here I am to save the day, now I'm really dating myself as a boomer, come in and the market doesn't care and believes the Fed can't prop up the market, then all the above things that you talk about reverses, and people are going to smash their cell phones on the sidewalk and swear off stocks, and then the next bull can begin. So you could be right. I tend to doubt it, and then I say, okay, well, but check your premises, Bakes. Here's the SPY right now. This is the daily, the S&P 500 ETF, and there's a daily gap down just below the 50-day on big volume. All the arrows are here. I hope you can see them. And so far, we get a low volume rally to the underside. It's just a warning sign for now, but it's the first time in about a year we've seen it close below the 50-day. And it's a sign that the market's tired. And people are talking about, September, October, those are the worst months, et cetera, et cetera. I don't care. It is what it is. The stock market is weakening. We've got earnings coming up next week, and there's all kinds of headwinds going on there. So I just think that a little bit of caution is warranted. So here's my take. Very long term, yes, we're up and to the right. And I think in your 401k, Mike, like we talked about before, keep plugging money into the S&P and an international fund, and don't give a damn. And just chunk the maximum you can into your paycheck and forget about it. But we're humans and not robots. And we all have panicked at some point. I'll never forget October 19th, 1987, and the bank crisis of '89, and the tech meltdown in 2000. So stocks do go down, and they go down really fast and a lot harder, and through valuations that you don't think they can hit. And I think I can be helpful so that you avoid not all, but much of that pain. And join me for the journey. I think it's going to be helpful. And then as I was typing this, I'm listening to a podcast, and Melissa Lee was touting on the tape. She's a CNBC anchor. Her Generation Gamble. And it's basically, it's addictive and fun to watch your meme stocks go up on your Robinhood account. And I agree with it. And go ahead and do it. Just do it with a small amount of money. But that is bull market final kind of behavior. And the documentaries are going to be very different in a bear market. And no one's going to be talking about how fun it is. It just isn't. GameStop came up again. And it brings a smile to my face because I got this 212 to 344 call pretty right, and got 26,000 views. And I'm going to, plug that. I get some things wrong, but when I get them right, I'm going to talk about them. But here we are now, 173. And, people ask me, what do you want to do now? And I say, watch this 200-day moving average at 161.41. That's a rising 200-day moving average, so it will go up. And if I'm getting too wonky, let me know, and I'll bring down or clarify the definitions. But I'm leaning to the downside. We've got the new CEO. They've had a capital raise. What are the future positive catalysts? And before the hodlers go lose their minds and say, oh well, we're going to stick it to the man and the short and all the shorts. The shorts have already come down. It's 11% down from 20%. It was ludicrous, over 100% before, obviously. It's 7 million shares. And being short at 173 is different than being short at 7. So, you're not going to get a squeeze. I don't think you're going to get a squeeze, period. And I hearken back, go back to some of my YouTube videos. Won't get fooled again. What I basically said was, number one, I wanted to have a video of Eddie playing one of my favorite Who songs, and I miss him, rest in peace. And then I segued into Weekend in Greenwich. And what I meant was, picture like you're watching Billions, and there's a trading desk in Greenwich, and the trader that's responsible for being short GameStop is getting his head kicked in, and the risk manager comes over, taps him on the shoulder and say, I don't care what your dividend discount model says. You're going to get this position down now. We're getting killed, and we can't show clients that we're down 51% in a quarter. So I think that's happened. I think it's done. And then I think, for every roaring kitty, there's 50 guys at Citadel and Merlin and Point 72, and they're all on Wall Street bets, and they're gaming the system. And everybody's got a Bloomberg where they can screen for high short interest and try to pick these things off, and I think it's over. You caught Merlin sleeping with GameStop. You caught some other people sleeping with AMC, but I think to keep the Who thing alive, the song is over. It's all behind me. And I think memes are dead. So I said it. Memes are dead. That's going to kick up some dust, huh? Anyway. Oh, here we go. Robinhood popularity is fading away with meme stock fad. So it isn't just me saying this. It's, oh my God, that's a tough name. Mr. Adnarayan, I hope I have that right, at Bloomberg, is pointing to daily active users at Robinhood are down. App downloads are declining. JP Morgan predicts the stock is going to go down 20% by year end. So it isn't so much fun when the confetti's not flying and Doge isn't going from a dime to 70. So this is already starting to be happening and slowing. And I don't rejoice at this. I'm saying this is what it is. And so let's go find some other things to do. And I went through all my charts, and I'll have more on that coming up next week. but I'm going to find other uraniums and we're going to have more fun. Yes, about high-quality SPACs. It's a little bit like jumbo shrimp in military intelligence, oxymorons, and I think SOFI fits the bill. But I'm hard pressed off the top of my head to come up what I would call a high-quality SPAC, and so I still prefer shorting the D SPACs, especially the EV players via SOGU, SOGU. So that's where I'm going. If you have a name you want me to look at, great. But I can't think of a high-quality SPAC that I want to buy on any dip. And I'm all ears if you got an exception, but so far, nothing for me. My themes and groups, I know this is the uranium show, but it's what people want to talk about. It's what gets the clicks. And frankly, this is why I did this, is that I want you to make money in every market up and down. And that is an audacious goal, very difficult to do, but that's what I'm trying to do. Because if you can at least have that 401k money clicking away and just staying invested all the time, great. But then there's going to be this ballast where you can hopefully be down 10%, be up 10% when the market's down 20%, and that's going to be, I think, psychologically very helpful, rather than watching stocks down without a sell discipline 70-80%, which does happen, and it happens a lot more often than this last 10 years would tell you. So here is where I am at URNM. People are getting a little bit freaked out, like, why doesn't it go up 4% every day? We went from 50 to, here's the perspective. We went from 50 to 100 in a month. We doubled in a month, just under 100. That's just take it and say thank you very much. When those kind of moves happen, you have to consolidate them. You have to rest, and you want them to rest. And frankly, you don't want them to go into parabolas, because parabolas, they retrace almost 80%, most of the time 80% of the move. And so what I think we're doing here, this is a 50% retracement down to 75 some odd right now. It's that 71 to 77 band I talked about in prior shows, and we're building the next launch pad. And the volume's increasing nicely. The relative strength is 96, meaning it's beating 96% of the stocks out there. The fundamental case continues to unfold beautifully. Let this winner run. Okay, now to show you that I'm talking my book, but I'm being very transparent. Global X Copper Mines, COPX. I invoked my sell discipline. It closed the 50-day cross below the 200. I sold the second third, and if the 200-day moving average turns down, I'm selling the rest of it. And so what happened? I'm up 14% for the year in this, 18% since inception. It's not going to pay off mortgages, but it's pretty good. And but the fact that I know what I'm going to be doing next, and it's most likely going to be getting out of the rest of it, it's just very liberating. I don't have to call my broker or ruminate. I'm just going to sell the damn thing. So we talked about the 50% retracement in URNM. We got more than a double in this, and I'm going to keep going with uranium. I'm short the MSCI. I own the ProShares short MSCI emerging markets, and I kind of do this. I cover up the left side and say, hey, this is just a compelling chart, and then I'll dig into it later. Well, I own this on that big volume increase there that I still think is very encouraging. And this is kind of a short communism play. I'm saying that a little tongue-in-cheek, but shorting communism has been a pretty good historical play. See Berlin. And so I also, I mean China. Now, I didn't know this at the time when I first found this, but I want to see the rest of the fact sheet, Mike. Thank you. This is 37% China and 13% Taiwan, and that's going to play into some other things. The big names here, TSM, which I've talked about them kind of rolling over, Tencent, Alibaba, Samsung, etc. And I just think China is a problem that is becoming more of a problem and having more of their own problems, and I'll go into that later. So EUM, I'm betting that China, Taiwan, Korea, India are going down, And I think that's a way to if we have a down market, we're going to make some money being short this. So short these kinds of companies. So my take is own some uranium here. I'm going to alert you to the dips as I have, and I'm good, true on my promise. I would keep buying in here. Dips in the rest of the market are more likely. Copper is telling me that. The fact that that emerging markets are going down is telling me that. I think we're getting tired, and so please stay tuned. All right, next, my Gray Swan segment, and I'm going to have a rose-colored glasses episode one of these days. But this is what I showed you, that pile that I put together on Twitter and put out and distilled it into the show. Well, here's what I have, and I can't make it up. In the Wall Street Journal, record Chinese aircraft sorties near Taiwan prompt U.S. warning. Over 3 days, they threw 93 flights with fighter planes off the southwest coast of Taiwan. And now it's the front page of the Wall Street Journal. And remember, Mike, we talked about it was in the back pages of the Guardian and the Economist. Now it's on the front page of the Journal. Not a shot's been fired, nor a missile. But this great story by Lisa Lin and James Aretti really detail the increasing tensions between China and Taiwan. China thinks there's one China and Taiwan is part of it. Taiwan disagrees. And I'm not Henry Kissinger, so I can't give you the chapter and verse of that history. But this is escalating. Is it escalating because it's a Biden administration? I don't know. Why is this happening now? I don't know. Especially if you're a subscriber in that region, I would love to get your thoughts. 2 weeks prior, in the op-ed page of the Wall Street Journal, Robert O'Brien and Alexander Gray write, "How to deter China from invading Taiwan." This is being viewed as a real possibility, and we ostensibly are Taiwan's ally and would come to their defense. And they talk about arming Taipei with missiles and turning the island into a porcupine. So this is not inconsequential. It is getting some more press, so it's becoming a whiter shade of gray, or lighter shade of gray. But keep an eye on this. So China has become a multifaceted bearish influence potentially down the road. The aggression towards Taiwan, the Evergrande debt situation, which we'll talk about more, their animosity towards Hong Kong and its people, and people becoming more violent and reactive to their oppression, the shutdown of many tech companies, or certainly limitations on many tech companies. The list keeps growing. So stay tuned here. I'm going to watch EUM, hopefully make some money. I'm looking for other places to exploit this, but I don't want you blindsided if conflict occurs in Taiwan and really upsets the market. Podcast of the week. This is Odd Lots, and it's the best explanation of Evergrande that I have encountered. Evergrande is a huge real estate development company, which is a huge part of China's economy. They have $300 billion in debt. They've already missed some interest payments on some. They are trying to get their way out of it. And my take on this is, and I hope this is a helpful analogy, I'm going to treat this like COVID, which I didn't do that well the last time. But I'm not going to panic, but I'm not going to dismiss it. And I'm not going to say it's going to be completely contained. I'm going to watch the charts, EUM and others, and constantly see what the Google alerts kick out, and what else I'm seeing. But I'm hard pressed to see a real estate bubble being deflated, and how that doesn't have negative implications in China and most likely outside China as well. So stay tuned. I'll keep you abreast of all this. My next podcast is the Pivot podcast with Kara Swisher. Usually Scott Galloway is the co-host. Elon Musk was interviewed at her Code conference out in L.A. Fascinating. He's a fascinating guy, a visionary, And I really encourage you to. It's about 52 minutes, but it's worth the whole darn thing. Talked about more about space than cars, and maybe that's Kara guiding him there, so I don't know. But keep open the possibility, you Tesla fans and shareholders, that it's been floated before that he would step down as CEO of Tesla and become the CEO of SpaceX and dedicate much more of his time to those efforts, which he seems much more enthusiastic about, at least from this interview. Again, SpaceX is valued at $100 billion. Scott Galloway proposes that it's going to be worth more than Tesla in the future. That's $800 billion. So he's getting there rapidly. And oh, by the way, at the last 3-4 minutes of this, he says that the EVs that he and others are building are going to require a doubling in the capacity of electricity grid, and that he is pro-nuclear. So a very, very meaty interview that I encourage you to check out. In Reporters of the Week, selling off its property services won't save Evergrande. This is from Jackie Wong. So what happens when people miss payments, companies miss payments, they try to drive up liquidity. And what do? You pick the asset that you can sell that's valuable and relatively liquid. And they're trying to sell this, but it's apparently not going to be enough. And according to the debt markets and Jackie Wong, a default of Evergrande is a foregone conclusion. And again, it's hard for me to see this completely contained. In the Journal, again, Julia Chung and Joe Wallace write up uranium. Uranium heats up and hedge funds score. And this is a very small pond. And you're seeing more financial players come into this, and I think we still have room to go here. In tweets of the week, John Quakes, at Quakes99, Mike was very complimentary about the Tim Rotolo interview, the CEO of URNM, and just goes to show how the quality of your podcast continues to rise with some heavyweight guests that all uranium investors want to hear. Keep up the terrific work, and good luck. John, I thanked you on Twitter, but I thank you again here. Thanks for the shout out and the support. I really appreciate it. And Mike, I thank you for the extra work for the Tim interview. Newsletters of the week, Bear Traps Report. This is Larry McDonald's team. Put out a buy alert on URNM. He's been in this name before, but now he's in it even stronger. We're seeing in India massive shortages of coal, lowest in years, and that is driving the massive shortage of electricity and an increased focus on nuclear. I don't know India's nuclear situation. I'll delve into that a little bit more. But all of these supply shortages and underinvestment in years is coming home to roost, and it's all playing into the bull case for uranium. Next, the uranium, the miners versus the NASDAQ. Obviously, this is a chart that I love. And, I just think that you have to own this. A wrinkle, we're seeing natural gas prices in Europe scream, and that plays into Putin's hands and Russia. They're the big swing supplier of natural gas to Europe. That doesn't make anybody in France or Germany or elsewhere happy. And so, again, there has to be some more, which can happen very soon, but the nuclear as an option has to be at the forefront. Japan's new leadership is going to restart nuclear reactors, and that's after Fukushima in 2011, a clear positive. Kyle Bass is talking about 7 years of underinvestment in the energy complex, and that governments everywhere are coming to the conclusion that nuclear is the best baseload option we have to combat climate change. And for my Share Scoops and Gus Christensen friends, if you're focused on ESG, you have to own uranium and be pro-nuclear, in my view. There's power shortage in half of China's mainland provinces due to their coal shortages. This is very, very pervasive. And Larry put this out. This is an analog of the S&P 500 now versus September 87, and it looks pretty scary. It looks very, very similar. I don't see portfolio insurance that was there in 87 to exacerbate this, but you don't need that. And I'm not saying this is going to happen, but I pointed to this time of year, earnings releases coming out, stretched stock market, and the fact that I'm 38% in cash, have 20% short, that tells me that the market is getting tired. Evergrande restructuring is possible, but it seems like it's going to become a state-owned entity, and they probably keep the property owners. They make them whole. They probably give a haircut to the local bondholders and probably wipe out the equity. And for the foreign investors, they're going to probably get toast. So that's what's going on with Evergrande. It's obviously a very fast-moving story. I'll keep you alert to what I see and what it means for us. All right, that's the show, folks. Please also subscribe to my Bakes Takes YouTube channel. The audio is the same, but the chart that I reference are on the screen. Follow us on Twitter at Bakes Takes and other social media. Please use your voice memo app and tape your questions and email to bakes@bakestakespodcast.com, or write if you prefer. I'll keep you anonymous if you'd like. Thank you for listening. Mike Wilson is my producer. Thank you as always. Have a great week. This is Bakes, and for my much-needed levity, unfortunately, we had to take last week off. Had to do some electrical work in the studio. Norm McDonald passed away. I think a very funny comedian. I just listened to a couple of things as I was driving over here. At 61, which is too close to my age and too damn young, and he went out with Jerry Seinfeld for Comedians in Cars Getting Coffee, and it's about, 6-7 minutes, and it'll bring a smile to your face, and I hope I do as well. I'll see you soon. Take care now. Bye-bye.